Welcome, let's get started. Okay, for the Bollinger Band method, what is a Bollinger Band? Bollinger Band is these three lines that you see. It consists of the upper line, which is also called the upper band, the middle band, and as well as the lower band. The simple methodology of a Bollinger Band is that every time the candle crosses the top, it means that the market is overbought, which also indicates that the price will be coming back to the middle band. Same for the bottom, market is oversold, crosses the Bollinger Band, bottom line, it goes back up to the middle portion between the upper band and the lower band. For this lecture, we will not be using much of the middle line. So as of now, you can just ignore the middle band here. We'll be only focusing on the top band and the lower band. And many of you might be thinking, for seasoned traders, Bollinger Band is a very simple method. But the difference between this course and the other Bollinger Bands that you have been using is a combination of the timeline, the time frame that you are using, the rules that you are going to follow, as well as the setting. As my setting is different, I'll teach you the setting in the next lecture, where you'll go through the different kind of setting of a Bollinger Band. And combined with my scenarios here, there are just 5 scenarios to follow, which will be covered in detail in the following lectures as well. As you see, there are many crosses between the Bollinger Band line. You will see one over here, and one over here. If you take note, there are different variations of a cross and false breakout, which you don't know how to enter or when to enter. For example here, when the Bollinger Band crosses the bottom line, it actually indicates you to do a buy, that the market is supposed to cross back up to the middle band. But if you do a buy without a proper stop loss strategy, you will make a very deep loss over here. Okay, so this is where I come in to guide you along to follow my scenarios. All different kind of scenarios will be in place to cover any kind of candle that is. Okay, there are a lot of different kind of variations here, which even if you enter with the variations, you will need to know how to exit the market, and when also, and when to take profit, and when to cut your losses, which will be covered at the following lectures. Okay, so let's get started. In this lecture, I'm going to teach you how to enter the indicator, including what to set in the indicator setting, as this is not the default setting. Okay, let's kickstart with a fresh chart. I'll just randomly open a new chart. Take out the grid. Change it to M5. Make sure it's on candlesticks. Okay, under insert indicators, look for under trend Bollinger Band. The default that you are looking at is 20 to 2. I want you to change the deviation to 3. Level and visualization, just keep it the same. Style and color, you can do your own change of color, but in this instance, you'll just use a yellow one. Alright. Zoom in to about this position so you can see the crosses clearly, because we are looking at the most recent crosses and not the overview of the whole market situation. Alright. What you're going to do next, you can do a right click under template, save your template, just change any name that you want. Let's change it to Bollinger Band method. I recommend you to use the top 4 big currency, which is the Euro USD, USD JPY, GBP USD, and AUD USD. If you want to add in gold, it's fine as well, as I'll be going through with you a different setting for gold as well for this course in the following lectures under the scenario portion. Okay, so what you're going to do is you can once you save the template, whenever you open a new chart, you can just right click, go under templates, and just click on towards the one that you just saved, and the whole setting will come out. Right? Just make sure that the time frame is back to M5. These are the things that you need to take note. For phone version, slightly more easy. Once you just input the Bollinger Band setting, just make sure the Bollinger Band setting is at 20 deviation 3. Okay? After which, once you have set up the setting itself, for a phone version, you'll see every time you open the chart, the indicator is there. Okay, it's just a little bit more troublesome for the desktop version. Alright, so if there's any questions, please feel free to ask me. Okay, so this is the indicator portion, and I'll see you in the next lecture for the scenario part. Okay, happy trading. Important part of the lecture of the Bollinger Band method. In this lecture, I'll be covering scenario 1. Okay, for this method, just have to follow simply on what I researched on to the method itself. I have different kind of scenarios. When it happens, just follow it and you can make profit through just this simple method, because I took my time to do the proper research, the back testing. If you trust me, from my previous lecture, my methods are all very simple and easy to follow. Just blindly follow will do. Okay, just time to time, just go over and over again through my course if you do not clear about it. But anytime, please drop me a text if you do not know anything or have any question. Alright, scenario 1 means that the first candle crosses, don't care if it's the body or the line. Second candle is a different color and it does not crosses the Bollinger Band line. Okay, the third candle you'll do a follow. So let's go through some examples here. What I mean by a first candle crosses. First candle crosses, second candle is a different color from this candle and it does not touch. Okay, always put this picture, this guide, download it side by side, put it side by side together. Okay, and then just follow blindly, like first candle crosses, body or line, second candle is a different color, no cross. The third candle is where you will enter your follow. What I mean by follow means that if it's touching the lower Bollinger Band line here, the upper line, middle line, bottom line here, the lower band of the Bollinger Band line here touches, follow means you do a sell. The price will continue to go down. Okay, if it's at the top, and if I say it's a follow, you will do a buy. Okay, if I say it's a reverse, means for a top, you will do a sell. For a bottom, you will do a buy. Okay, try to get this point clear, because this is very important, as you will have to go through the other rest of the scenario in the later lectures and understand it properly. Okay, but rest assured, once you are good with this method, you will see it's so simple to apply. And you will see money just coming in very, very quickly. Okay. Second example I have here is somewhere around here. First candle crosses the top. Okay, this is the line that is crosses. Previously, the example, the body crosses. Second candle is a different line, different candle, sorry. Second candle is a different color from the first candle. This is where you do a follow, which means you will do a buy. Okay, and you will get your profits around here. My style of trading is very simple. I go for big lots, I enter very fast, I do day trading. Small profits, I do 10 times a day. For example, each trade gives me 20, closes about 15 to 20 minutes or less. And one day I make about 200-300. And if you want to scale up with a bigger account, next time you won't be trading with one lot. You'll be trading with even 10 lots, then you'll be getting like 2,000 a day or something. Okay? Next example I have here is around here. First candle crosses. I have here also, first candle crosses. Second candle does not touch the line. Second candle does not touch the line. Then here you will, third candle you will do a sell, which is following. You see it's a very obvious downtrend here. Here you make profit the first trade. Here you also will make your profit second trade. So within this half an hour, you have already made twice. And easily you can just target per trade, just earning $20, $30, and that's very little. One small example I show you. If I randomly enter, if you do a margin, this small little margin will already gives you, oh sorry, this is a buy, so press wrongly. This small little margin will already give you $43. So if you're targeting maybe just $20, $30, it's just very little here only. See, it's very small margin, so how can we not make money through here? Okay, one final example. Crosses, body crosses, second candle never cross, different color, and we'll do a follow. Follow means we'll do a sell on the third candle. Okay, each candle for 5 minutes charts represent 5 minutes for each candle. 5, 10, 15, 20, 25, 30, 35, 40, okay? So if there's any question, please let me know. This scenario will always come out all the time, alright? So do watch out for this. This is very easy money. Okay, see you in the next lecture. Welcome back. This lecture will go through scenario 2. Okay, refer back to the guide. Scenario 2 means that the first candle crosses either the top Bollinger Band line, the upper band, or the lower band. Remember, ignore the middle band. Okay, the second candle is a different color and it crosses. Then third candle, you do a reverse. Okay, the difference between scenario 1 and scenario 2 is that both is different color, but one never cross, one crosses, but both also do reverse. Alright, there's a reason why I put as a scenario 1 and a scenario 2 and I don't join these two together, as it makes a big difference. For same color or non-same color, try to cover every kind of scenario there is in different kind of settings. Okay, so there is a reason why I put these two as different. Alright, let's go back to the chart. What you mean by this is, first you see this. One cross, the other one is a different color from this candle, also crosses. For the top band, when we do reverse, right, equals to, we will do a sell. If the thing happens at the bottom, we will do a buy. Okay, let me see if they have example for a bottom one. Yes, over here. One candle crosses, second candle different color crosses as well. And we'll do a reverse, meaning we will do a buy. Reverse means the market will go back, reverse up back. Okay, in terms of, if I say follow, right, means that if both candle, if one of the scenarios later will be a follow instead of a reverse, which I will cover it later on, so I hope I don't confuse you guys. Okay, moving back to this. Another one will be over here. Here. Okay, candle crosses. Second candle different color crosses. Third candle you will enter a reverse, which is a sell. Okay, you will get some healthy profits here. One example here. Crosses, different color also crosses, and you do a reverse, which is a buy. One scenario here, do take note, this is important, as if you look at this candle, the reason why I put the rules as crosses, never put as touch, means that ignore those candle that touches the line, that you don't really see a very obvious cross. It's not counted as a cross. Okay, very important. This kind of candle, this one, this candle, if you don't see an obvious cross, then just ignore it. Okay, only go for things like this, obvious cross. First candle crosses, second candle crosses by a different color. This will hit your scenario 2. On the third candle, you'll do a reverse, which will do a buy. I'll teach you when to exit based on your risk and based on your greed level and how much money you have to sustain your account on holding it long for the long-term profits, or just want to hit and run like me. Take small profit each time, but I exit very fast. See the timing? I exit very fast, I eat small profits, and I grow it to big profits. This is one method which I'll be covering. One entry point of greed and risk when reward in the following lectures. Okay, so go through this scenario 2, very important. Alright, I'll see you in the next lecture. Welcome back. This lecture will cover scenario 3. In scenario 3, it will be the first candle crosses the upper band or the lower band. Second candle is the same color, but it does not cross the line. Third candle will do a follow. So finally, this is the first scenario that we will test on what is a follow. Okay, there are additional things to take note which I will show you in a while. Firstly is this, alright? Let's look at the example of scenario 3. A scenario 3 will look like this. Over here, every time this scenario happens, it very seldom happens. But when it happens, it will indicate for the next 2 or 3 hours a very strong trend towards the upper line or the bottom line. What I mean by this, if you are looking at the top upper band line, make sure that it is a buy candle. Okay, it does not apply for a sell candle. A buy candle meaning that in the middle of the candle is empty. The one that is colored is a sell candle. On the top line only applies to the buy candle. On the bottom line, same, only apply for the bottom, only apply for the sell candle. Alright, so we have one example here. First candle cross, second candle, same color, never cross. Here, the third candle, we will enter a buy, which means a follow. Follow means a buy. If it's on the top, follow means a buy. If it's on the bottom, follow means a sell trade, okay? Second example over here, we have one more. First candle crosses, second candle, no touch, the same color. Same color means this is a sell candle, this is a sell candle. Third candle will enter a sell. You see over here is a very strong downtrend for the next 1 or 2 hours. Okay, for this is not counted as a cross. This is not counted as a scenario 3, as this is the first candle that crossed. Second candle is the same color but also crosses. Okay, so do take note. Let's move on to the next example. We have one example here. Do take note that the second candle here, first candle crosses, second candle didn't cross. Okay, didn't cross. This is counted as scenario 3. When you will do a follow, you will enter a sell. Take note that this is not a scenario 3. Okay, we have one more here, scenario 3. Line crosses, second candle doesn't touch, same color, because this is a sell candle, sell candle. Third candle, you'll do a sell. Alright. Next example we have here. It will be, can you guys see it? Give you some time. Okay, this is the one. A sell candle. Do make sure that this one never cross. This is just touching, never cross. It's not an obvious cross, it's not a cross. This is still counted as scenario 3. The third candle, you will do a sell. Will get quite a lot of profit. Okay, nothing else here, nothing much. A scenario 3, no. Okay. In times to go, you will get used to what the scenario is. If you can memorize them by heart, then when the time you see it, you will know when to enter and how is it like. Okay? It takes some time also. For me, it also takes some time, even up to now. I sometimes still refer back. Alright, we have one more here. The first candle crosses, second candle does not cross, same color, we'll do a sell here. Okay, you'll still be a very strong downtrend. Let's take a look at one last one over here. A sell candle, next candle does not touch, same color, we'll do a sell here. Alright, on when to take profit and when to stop your losses, I will go through with you after the end of the scenario explanations, which is at the bottom lectures. Okay, so do go through this. This scenario 3 doesn't happen a lot of time, but very rarely, but it still happens. So I have to put this as a scenario as well. Okay, I'll see you in the next lecture at scenario 4. Alright, we have come to lecture 4. So in lecture 4, scenario 4. In scenario 4, it's a very straightforward scenario. It means that the first candle that crosses the upper line or the bottom line, the second candle, if the candle touches the middle line, be it the same color, the different color, it crosses or touches, as long as the second candle touches or crosses the middle Bollinger Band line, don't trade. Okay, one of the example will be this. Okay, first candle crosses, second candle touches the middle Bollinger Band line. As long as the second candle touches the middle line, don't trade. Okay, don't go and itchy hand and go and trade. Don't go and do a buy or sell, because there will be no indication of uptrend or a downtrend in the long term or short term. It's a very random market. Okay, so don't do it. Right? One of the examples will be this. Crosses the bottom line, bottom Bollinger Band line, second candle crosses or touches the middle line, don't touch. Alright? Move on, we have this. Over here, one over here. This one even worse. The first cross touches the middle line also, but doesn't matter. We just look at the second candle that touches the middle line, don't touch. Okay? It does not happen all the time, but it does happen. So do take note on this and just have to remember very clearly, don't touch. Okay, we have things like this also. First candle crosses, second candle touches the middle line, no trade. Here, crosses, touches, no touch. Cross again, touch again, don't touch. Okay, you can only touch here. Right? We have this one is here. First candle that crosses, second candle touches, no trade. Okay, so scenario 4, very straightforward. The very scary part is the scenario 5. Okay, so just have to take note this on the scenario 4. I'll see you guys in scenario 5. Alright, let's go into the most complicated part of the whole lecture, which is scenario 5. Okay, in scenario 5, I am going to split it to 4 parts. Part A, Part B, Part C, Part D. Because there's a different scenarios for A, B, C, and D. So we'll focus on the first one, A. Okay, so scenario 5 is both candle, one candle crosses, the second candle crosses, but both is the same color. Then it comes to your third candle. We'll focus on scenario 5 right now, which is the third candle crosses, but it's either the same color or different color, doesn't matter. Okay, doesn't matter. Fourth candle reverse. Alright, show you some examples right now. Okay, so first candle crosses, second candle crosses, but must be the same color. Then it is valid for a scenario 5. There comes your third candle. Alright, third candle wise, must have obvious cross. I say this is obvious cross. Later I show you a bad example. After this is the third candle, be it this color is the same or different. The fourth candle you do a reverse. So if it's the bottom, right now it's crossing the bottom Bollinger Band line. When it reverse means that you do a buy. Okay, so try to get this clear. Bottom, buy. Top, sell if it's on reverse. If I say it's a follow, means that top, buy, bottom, sell. Okay? Okay, get back to part A. 3 candles, 4th candle reverse, must cross. Okay? This example is not counted as a scenario 5 cross. If this second candle you see like got cross, never cross, not confirmed, it's not an obvious cross, don't take it as a cross. Alright? Move on to the next currency. Euro USD we have here is not counted. We have here cross, 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 reverse at the 4th candle. Okay? This one, cross, 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 reverse at the 4th candle. 2 candles, the first and second candle must be the same color, okay? To qualify for scenario 5. Cross, cross, 2 candle the same color. 3rd candle don't care the color is the same or different. 4th candle reverse. Alright? 1, 2, 3, 4, or 4, but it's the 3rd candle here, the 4th candle here, you already enter a buy. Okay? 1 candle cross, 2 candle, both is the same color. 3rd candle, don't care about the color. 4th candle, you will do a buy. Okay? So this is for scenario 5, part A. Alright, we'll move on to part B in the next lecture. Scenario 5, part B. For this one, it's a little bit special because if this happen, you don't trade. There is no trade for this. Okay, so let's come across to this scenario 5, part B. First candle, second candle is the same color, both crosses. 3rd candle is the same color also, but it does not cross. Don't touch, okay, because there is no consistency to this pattern itself. I'm good with patterns, but for this there's no consistency. It goes up, goes down, goes swinging. So the best way is not to touch. If I'm not confident in a trade, don't touch. Okay, so here is some of the examples. First candle crosses, second candle crosses, same color, 3rd candle is also the same color. For this trade, you see that the market is going up, followed by a down. Okay, now let's look at the next chart. First candle up, second candle, 3rd candle no touch. It's a swinging market. So there's no consistency to this pattern. The market can go up, market can go down, market can go sideways, which is not a very good sign for this method. So I would strongly suggest that for scenario 5, part B, the first candle crosses is the same color, second candle is the same color that crosses, 3rd candle don't trade if it's the same color and it does not cross. Alright, next example we have is USD JPY. Same thing, crosses, crosses, both is the same color. 3rd candle crosses, not it's the same color also, but that does not crosses the line, the top upper Bollinger Band, and market went down. For the first two examples, this is an uptrend, this is no uptrend, no downtrend, it's just swinging in the middle, and this is a downtrend. Let's look at the last example, Euro USD. We have it here. Crosses, crosses, same color. 3rd candle does not cross, same color. You don't know it's going up or down. Alright, so best way is not to touch. Alright, no trade for scenario 5, part B. Right? I'll see you in the next lecture. Begin scenario 5, part C. Okay, in part C, some things to take note. Okay, same thing for scenario 5, first candle and second candle must be the same color and then both cross. Alright, part C, the 3rd candle never cross but it's a different color. Alright, then over here, the 4th candle you do a reverse, but gold you do a follow. For beginners, I strongly recommend you not to touch gold. As gold, you need a higher amount of capital to hold your trades. If not, your account might get wiped out or you'll see a lot of losses at the start, which will make you panic. So for scenario 5, part C, I would suggest newbies, beginners, or even seasoned trader to just try out this method to not touch gold until you're seasoned with the big 4 currencies. Then you go into gold. Okay, let's take a look at some examples. So, scenario 5 part C, sorry, it means that for first 2 candle that crosses, third candle is a different color. So this one is what we covered in scenario B. Okay, scenario 5 part B. This is scenario 5 part C. First candle touches, second candle touches, same color. Okay, third candle is a different color and that doesn't cross the line at all. This is where you do a reverse and the fourth candle. Okay, these are for currencies only. Alright, so one more time. First candle crosses, second candle crosses, first and second candle both is the same color. Third candle does not cross and a different color for part C means that the fourth candle you will do a reverse. Okay, which means you'll do a buy here. Okay, you'll do a buy at this candle. For this example, first candle cross, second candle cross, both is the same color. Third candle doesn't cross, different color. Same thing, you do a reverse at the fourth candle. Alright, I hope you are starting to get the hang of it. It might be a little bit confusing, but go through it again, it will be better. Okay? Over here, same color, cross top, third candle doesn't cross. No touch, different color, you will do a reverse at the fourth candle. Here, you'll do a reverse here. Okay? One candle cross, two candle cross, both is the same color. Third candle doesn't touch the middle Bollinger Band line, doesn't cross the top line. Fourth candle, do a reverse, which means you'll do a sell here. Okay, same for this. Just now the example, because you're at the top, you will do a sell at the fourth candle here. Because the candle move up and down during these 5 minutes, and here, you'll do a sell here. And finally, gold. Gold, remember, you do the reverse of what is taught, which is not recommended for beginners or seasoned traders that have just started this method. Alright? This means that the first candle crosses, second candle crosses, both is the same color. Third candle is a different color. Right? Fourth candle, you will do a follow, which means you will do a sell instead of a buy. Okay? Remember, anything that is below is a, when I say follow, is a sell. Anything that's above, when I say follow, is a buy. Alright? Hope this is clear. Just try to whack on these 4 main currencies. Okay, I'll see you in the next lecture for scenario 5 part D. Okay, welcome to scenario 5 part D. For part D, it's a very short lecture because it really doesn't happen all the time. It's very, very rare. It also take me quite some time to find some example. This is not exactly the most perfect example, but this is what it might look like. Alright, so crosses, same color. Third candle crosses the middle line or just touches the middle line. Don't touch, don't trade anything. This kind of scenario is very rare, so I hope you don't see this kind of scenario at all. But general rule of thumb, if you are not confident in your trade, don't trade. Trade only when you are confident. If things that you are not sure or not yet confirmed or not sure if the candle crosses the line or doesn't cross the line, don't trade. Okay, don't worry, there are a lot of trades out there. So if you do it consecutively, you can have small winnings, you can have losses also, then you have small winnings, but it gives you overall a profit. Just look at the dates. The dates are all very fresh. I have about 3 losses. These are due to some mistakes also, I think. But I have winnings enough to cover the losses. I think this is what I mean by a high winning rate with consistency as well as discipline, and don't be greedy in your trade. Alright? I'll come out with another lecture in the next one for a summarize on all the scenarios from 1 all the way to scenario 5. Moving along with the chart to tell you where to trade, what is this scenario, what is this scenario, and moving on and how to trade. Okay, it should be in the next lecture, somewhere along the line. Alright, see you guys in the next lecture. One of the most important part of the whole lecture is where you set your take profit, your stop loss, when to enter, when to exit. This part is very important and as it works together with your discipline and not greediness. Okay, my style of trading is a logical way of trading. It's not like what outside teaches you on risk and reward ratio. You only set like just a little bit profit with a 10k account, you can only trade 0.01 lot. I think that is bullshit to me, because if people tell you that there are safety net in forex trading, I'm sorry, there's not. Forex trading is a high risk trading, so there's nothing safe about it. There's no way that you can use 10k account and then trade 0.01 lots and hold your trade for at least 1 or 2 weeks just to get that 1% of returns and getting $100 profit while risking 10k. Some of them might say that even 5% a month is a lot, as banks only give you like 0.05% a year. This is where it comes in. If you are going to trade forex, why not risk a little bit, but yet control your risk with just $1,000 USD or even 500 USD by profiting and also holding your stop loss and your risk properly. So my style of trading is this. I would enter at a bigger lot size with just maybe a 1k or 3k USD account. I enter 1 lot, but I don't hold more than 1 or 2 hours. My trades, as you can see, is all very fast. I don't like to hold trades to the next day. I like to do what we call day trading, high frequency. Another way people call it Guerrera trading, which means that I use a small account, I enter at big lots, but yet I close very fast. I take very small profits, but which small profits like $20, $20, $20 USD. 10 trades will give you 200. If you just base by 20 days of trading days, you will make 4,000 USD. Based on even just a $1,000 account, that is a 400% profit, a 400% returns from your investment of $1,000 USD, which I think makes sense in forex trading because you are already in the game, you are already in the high risk trading platform. There's nothing safe about it. Let's be clear about this. Okay, so a lot of people don't like my method, but my method makes sense. I don't have stress to hold to the next day. I end my day with just maybe 1 or 2 hours, but I earn a target of 200 USD a day. And you do slowly, with your account size growing, you do scaling up. Instead of trading 1 lot, you trade 2 lots. Doing the same day over and over again until you hit a $100,000 USD account. That is where the real money comes in. But it's the same thing. When you start learning to drive, you totally don't know how to, or even ride a bicycle. But once you already know and you do it almost daily, some of you can even close your eyes and just ride a bicycle or drive a car without even thinking, which is what we call autopilot style. Alright? So I'll go through with you my trading style. If you like it, you follow it. You don't like it, you don't follow it. It's fine with me. There's nothing lost to me, but I just feel that it makes sense. If you calm down and think about it, it makes sense. Okay, earning $100 a day. 20 days of trading days will give you a good 2,000 USD. On base of what, $1,000 USD account, you are going to make much more than what account managers or forex traders with 10K account asking you to trade 0.01 lot, earning 100 USD a month. That to me is bullshit. Alright, so in part 2 of this video, I will show you what I mean by small losses, controlled loss, small profit, to combine to make you a good 100 to 200 USD a day consistently for the month. So you'll see profit and you can sleep with peace every night. Okay? Okay, great. Welcome back. Okay, to my last video, I tell you a little bit about my trading style. Okay, this is what I want to show you is that let's look at January 5th. I made about, let's say 1, 2, 3, 4, 5, 6, 7, 8, 9. I made 9 trades. I want you to focus on the timing. See the timing, 759 here, 803. I can make $19, which I take very fast. Just take some time to just look at the video on the timing itself, and on my stop loss and my take profit, and on my entry level. This is my entry level. My take profit is only a very small margin, but I enter at big lots. I gain all this profit. Small profit will give you to a very big profit constantly, and I don't spend too much time. So maybe one day I spend about 1 or 2 hours and that's it. Then I can concentrate on other things and have a good work-life balance. Alright? So let's go on to the take profit and stop loss. Alright? Following to the scenario 1 all the way to scenario 5. We have it here. This is live trading right now. I always put my guide here side by side together with my chart. So sometimes if I forget, I can refer back. Alright? Maybe you can look at something like this. This is, if you can take a look at this, this is actually scenario. Let me see. The first candle crosses, second candle touches the middle line. So this is actually your scenario 4. Second candle touches, no trade. Alright? And this we have a good example of the first candle crosses. Second candle is a different color, no cross. We are supposed to do a reverse here. Correct? We'll actually do a buy here because we'll do a reverse. So where to put your stop loss? There are a few ways to do it. Firstly, you can always do your grid. Open your grid here. Just remember that your entry point is here. Alright? This is around your entry point is around, your entry point is around here. The third candle where you enter, enter around here. I want you to focus on 2 grid boxes for your stop loss. Grid box 1, grid box 2, this is your stop loss. Where is your take profit? One of your take profit can be just 1 box. So mine is a 1:2 ratio. 1 box as take profit, 2 box as stop loss. This is one of the method that you can use for your take profit and stop loss. Okay. Second thing I want to show you is this. If you can guide, you can look at the next candle and be a little bit patient. Meaning that if you enter at this candle, if you see the next candle or the next few candle that is longer than your previous candle, please exit the trade. Okay, this is one of the way for your manual stop loss. Okay, do a manual stop loss. Alright? Second thing, for the take profit, what you can always do, let's take example like we are entering a trade right now. Let's just do a random sell. Okay? You can, if you are using a computer, which is highly recommended, drag the box down to be about 1 box. You can also open your grid to target around 1 grid box. And this is your take profit. And as you can see, with this small little box here, you can potentially earn $62.52, which is 47 pips. Alright? Or you can even lesser your target to be $34. If you make 10 consistent trade with this small little margin at just $34 times 10, that's $340. Right? So I always target small profit. I don't want to target the maximum of like the whole downtrend here. That's where people start to lose money. And that's where people start to be greedy. Okay? So there's a part 2 to this video, which I'll explain more to where is your exit point, your entry point, as well as your stop loss. Alright? Okay, welcome back. So where is your entry point based on the scenarios 1 to 5? Okay, let's put an example for over here. This is one of the scenarios here. We will always put the guide beside the chart. So if you are looking at the chart right now and this happens, take out your guide, go through first body cross, second body cross, third body same color, no cross, no trade. Alright, so let's move to around here to see if, let's say, we have a trade here. Yes, first candle cross, second candle doesn't touch, different color, no cross, third candle you are supposed to reverse. So this is actually your entry point at your third candle, at the start of the candle, start of the third candle, meaning you will count down to the timing of this M5 charts equals to every candlestick represents 5 minutes. Look at your current timing that this candle ends at 1840. See the timing here at the bottom here? 1840, a new candle will appear, which is happening in the next 1 minute time. A new candle will appear. And at this price, or even higher or lower, whatever price it is, at the end of this 1835, the next candle will appear, and that's where your entry point is. If you hit any of the scenario at either entry point of your third candle entry, or fourth candle entry, use the guide. Alright? Importantly, where is your stop loss? As was said just now in the previous video, stop loss can be either when you enter a trade, the next candle is longer than your previous candle, exit the trade. Secondly, if you do a random, for example, I do a sell now, I put my take profit as around 1 green box, or even to my targeted profit of maybe just $20 per trade. You can also limit your loss by dragging this up, and you can just hover your cursor and you'll know actually how much you will potentially lose if it hits this line. I would always suggest you to have a 1:2, but try not to put so close. Okay, as you can see right now, if we are in the trade, we are actually already profiting already. We're just waiting for it to hit the line, and we'll make $25 just like that. It is very fast and simple. We are just targeting very small margin. For traders that trade from the whole trend, meaning that you have a $10,000 account trading 0.01 lot and targeting from here to here, you probably just make about $100 or so. But just this small little tiny margin within the candle, you can potentially make $25 already. So capture your time right, following the guide side by side with the scenario of the Bollinger Band, upper band and the lower band, for you to determine when to enter the trade. I would always suggest you to just target 20 to 25 USD dollars, which is this small margin only, which at every single point you will hit this no matter what before it even touches your stop loss. You will not even have to see this kind of cursor. Most of the time you will take profit at the next few candles within 15 minutes or half an hour. You are not actually targeting this kind of cross, like the whole up and down trend. You'll be just targeting like just here. If you enter a trade here, you will have made your profit here already. So for example, if you have actually entered your trade around here, at around here you would have already made $40 over, which is enough. You're not even going for the next few candlesticks to determine your exit point. Alright, so always try to target small entries, small profits. Small profits will turn you into big profits. Alright, in the next video I will show you a guide through on a random chart. Then we'll go on to every single momentum of trading on the scenarios. Alright? Alright guys, welcome again. So for this lecture, I'm going to teach you a additional method that also has been working. So for people has been trading the reverse method for the Bollinger Band setting of 7-3. Remember, this is the setting. So something to add on is when you are trading timings like 3 p.m. GMT plus 8, 4 p.m. GMT plus 8. These are timings like when the London market just opened, or timings like the 8 p.m. GMT plus 8. Instead of going reverse, where the crosses you do reverse, you start your level 1, 2, 3 onwards. What you need to do is you do a follow instead. So for all this crucial timing, it's good to do a follow. Means if the green crosses the top, you will do a buy instead of a sell. So you follow the trend when the market is volatile, when the market just open for London and US timing, or even when there are news in the economic calendar using the investing.com. You can see the economic calendar there to show you where are the timings that are most that the currency will become volatile. Alright, so same thing if it's on the bottom side. For a top side, of course, you do a follow. For a bottom side, you do a sell, follow, like this. As of now, you can see that the market right now is actually moving because of economic news. So when you go into investing.com economic calendar, you can actually just Google it and click the first thing you see. So you change your timing back towards your own GMT timing. Then you can see clearly that around this timing there are news come out and it will affect the market. So that's where you see there are more volatility and going by trend just one direction because of the news outbreak. Okay, so right now I'm going to teach you a new method. Alright, this is separate from any of the Bollinger method, the top line and the bottom line. We are going to use the middle line also. So a simple explanation is that, as you can see, while the candles are moving up and down, it crosses the middle line. The whole candle crosses the middle line and somewhat the trend change for a moment there. So how do we make use of this moving pattern of the candlesticks to determine our trade? So here goes. When the trend is going up, here you ignore. Let's say we'll be starting from here. When you see the candle crosses the middle line over here, and I want to see a full candle without touching any of the lines. Once I have a full candle, the next candle I will enter a sell. For this instance, is the trend from going up is going down to a downtrend, crossing the middle line. So moving forward, it will be something like the next one over here. Once you have trade here, this is your first level, level 1, where you will make your profit faster, more instantly, and regardless of timing, market opening or market closing or non-volatility timing. This method works on any currencies given. Of course, look at your profit. You must look for at least 75% and above. Moving on, when you see that the price close up, you want to see a candle that does not touches any of the line, the top line or the bottom line. So the next candle you enter a buy here, which you will also make it at level 1. As long as you enter 2 minutes by the time itself, the next candle, your entry level should be around here. And as long as this candle is green, you make a profit. Okay, same for this. When we move on, the trend goes up and the whole trend goes down again. Once it crosses down, you want to find one candle, the next candle that does not touches this middle line and the bottom line. Next candle, you enter a sell. Okay, so this is why it goes. For other currencies, you see it works for other currencies as well. When it crosses down, full candle, next candle, enter a sell, your profit at level 1. Full candle, next candle, profit at level 1. Down here, the full candle here, you'll lose at level 1 because this is a green candle going up. The second level, you'll win at level 2. Okay? So if there's any question, do feel free to check with us again. Leave us a comment. We'll try to answer them as soon as we can. Right? Thank you guys. Happy trading.